Welcome to this episode number 51 of Your Next Trade, called today AI 2.0. What we saw this week is a confirmation of what has been happening over the last couple of months. You should not be shorting technology, and the big tech are on fire and are driving the market much higher. So you can be talking about how those fabulous 7 and plus now artificial intelligence are bringing the market higher, and we are talking stocks. So let's look at this week what has been happening, and starting with the year-to-date performance that we have here, looking at some US stocks, most of the US stocks, I will say the ones that have a market cap above 2 billion. As you can see here in this column, this is for the industry that those companies are in. Most of them are the semiconductors. So the big winners year to date, I mean, it's only 20 days into 2024, have been semiconductors. Why? Because on Thursday, so if you have been on our Discord community, I've been posting before the European Open that TSM, which is Taiwan Semiconductor, was saying that for 2024, actually they were seeing revenues to be up 10 to 20%, that CapEx will be quite important. The reason is the following. AI, artificial intelligence, is becoming more and more complex and is requiring more and more powerful semiconductors. So before the Open, I was reading the transcript from TSM, and that gives you this crazy move that we had in the semiconductor space from on Thursday and Friday. All of this is making the market, equities, stocks. We are talking S&P, we are talking the Nasdaq, but the S&P making new highs, and we are going above the 4,800. So what about the week-to-date asset performance? Starting with the US, S&P up 1.2%, 2.3% for the Nasdaq. Europe struggling, emerging markets struggling. Dollar a bit higher, so 1%. And if we look at Bitcoin, Ethereum, they are been making going down 5% on the week. Why? Since we had the launch of the ETF of Bitcoin, which was last week, there has been a sell the news phenomena. What about WTI? WTI is still around 70 to 75. It might be breaking some levels, so that would be something that I'm now putting into my watch list going for the next few weeks. So what about the week-to-date industry performance? Here we got the S&P. So the S&P is here. You do have a lot of losers, and you do have some winners. But as you can see here, the winners, semiconductors, technology, are taking all. So again, sorry if I'm repeating myself, but over the last 2 to 3 months, I've been clear on saying, don't short this market as long as tech is so strong. Tech is really strong. Macro is not that great. Macro is okay. Retail sales, are we going to talking later, are going to be okay. But literally this market is driven by those very few names. 60-70% of the fabulous 7 are making this performance over the last 12 months. And we see here semiconductors up 8% for the week. So what about the week-to-date sector performance? This is the same picture. Who is the big winner? IT, so technology. Interestingly, utilities very weak over the last 2 to 3 days, same as energy. So this is 2 sectors to be checking. I'm not sure yet what's going to happen next. So what about the rates? So we jump from stocks into rates, looking at the 10 years. So 10 years, sorry, that was not yesterday, that was the day before. So we went to 419 on the 10 years. Interestingly, the 10 versus the 2, there is a bit of steepening, so we should be monitoring this possible steepening, because very often what happens is when the 10 minus the 2 that is going positive, that we could see a recession. So again, something that has not been working as a leading indicator, as macro, but maybe in the future it's going to be working. So expectation through the Fed fund rates, I compare versus the just after the FOMC meeting. You see those 2 lines, the blue and the red, are more or less the same. The expectations for this year are now around 1.2% cut. So at the end of 2023, we were at 1.5% roughly, so a bit of less cut like one less. That gives you 5 cuts instead of 6. And for March, the odds of a cut happening are coming down. So maybe not March, we're going to see. Interestingly, the Fed is in blackout period starting today. So the Fed members are not allowed to be talking until 2 days after the FOMC meeting, which will be in 10 days on the Wednesday. What about volatility through the VIX? 13.6%. We get the VIX expiry on Wednesday, and we had a bit of a spike over the last few days. Tons of calls and call spread have been bought for February and March. So you do have like a lot of open position, and if we start to see volatility going higher, you could see a very big move in volatility, because there is a lot of positions, as I say, through the VIX. So let's jump into the technical analysis, and I'm going to be taking a bit more time than usual, starting with the S&P. So S&P, you see, we are talking about the weekly chart, weekly candle over the last 12 sessions, the last 12 weeks. Green only, we had only one red. So the market is very much into the ends of the bull. No reason to go against it. If you look at this trend, we are roughly at the middle of the range. Of this range, we could go into the 5100. I'm not saying that it's going to happen, but for the time being, this is the bullseye in control. No need to really short it. What about the Nasdaq? Nasdaq making new highs, bit of breaking out after breaking out. Russell, this is the weak part of the US market, but we do know that there are many names that are struggling. I'm interested into CL1. So CL1, a bit of dodgy technical analysis, as I like to call it. It has been trading between 70 and 75 over the last month. Okay, so that's the weekly that we have here. We could see, looking at this, that it might go a bit higher. So I'm not sure what to think. I've been struggling with CL1. I don't have any position. Euro dollar, we are trending around 105, trying to find the next direction. What's going to be happening is on Thursday we get the ECB, so ECB meeting 1 week before the Fed. Dollar yen 148, so we are getting very close now to the 152. We get at the end of the month, start of next month, the Bank of Japan, they will have to deliver, because so far the weakness of the Japanese yen is going same way. So SOX index, something that we flagged over the week. I mean, probably everyone that has been watching the market is doing the same. So it's not like we are superheroes. Making new highs, big breakout. So if you look at Nvidia, let me put Nvidia. The 500 level that was a couple of weeks ago. This is the level we broke up, and then we carried on. If we look at another one that was big mover, that was yesterday, SMCI. So huge volume. We are talking 35 million shares. We went into the 360, so we opened a bit lower, and then we have been on a tier over yesterday session. So really big move. If you look at Apple, actually managed to bounce from the 180, so there has been an upgrade during the week. Now looking at Europe through the stock 600, struggling now, same with the DAX. I think one of the issues that Europe is facing is not only Ukraine, but the issues in the Middle East, which are putting pressure on the supply chain, and some tankers to go through, are negative for the euro and negative for the euro dollar. So this is it for the technical analysis. So what we had for this week is really a big move from the tech. Again, we flagged it in the past. Be extremely careful. The market, through to the weighting of those big tech, those summies, will move higher pretty easily. And if you look at the performance, so that's something that we discussed during the last week 2024 ID generation webinar. 60 to 70% of the S&P and the Nasdaq 100 performance over the last 12 months is explained by those 7 names. So if you're on top of that, you had those super winners, which will be Nvidia, AMD, that pushes the market higher. So for the week, retail sales, the consumer are still doing okay. As I said, Taiwan Semiconductor. So on Thursday morning, so that was here. TSM came with their earnings, with their revenues, and they were saying, so again, you should be looking at the market leaders, and TSM is one of them. It's very important player in the ecosystem of semiconductor. And on Thursday morning, US and Europe, they did, as usual, an analyst meeting and a conference call, and they were saying, for 2024, they were expecting 10 to 20% earnings revenue growth, as I said. But if you read the comments, because it was mostly about artificial intelligence, and as I said before, because artificial intelligence is more and more in need of big data, you need more and more powerful semiconductors. So what happened, you had this on Thursday, you had another news from Microsoft, not from Microsoft, sorry, from Meta, where the CEO Zuckerberg said, we will be buying another 100,000 mega chips of NVIDIA. Those ones will cost $30,000, so that gives you roughly 3 to 5 billion at least of revenues, and Microsoft will do the same. So big move, but as well as always, we do have the option. So don't get me wrong, macro doesn't work as much as before. Market is very much driven in full steroid by the 0 day to expiry. So we had this big move that started roughly at 6 in the US market. So 6 o'clock, 6 p.m. As you see, we started the ramp. We got the OPEX here. So OPEX for the futures, and then we had the OPEX for stocks. So 6 o'clock, big ramp, but one of the reasons is we got the QYLD, which is the Nasdaq covered call. So this is a fund that is roughly 10 billion that is long the market, and in the market, and in the meantime is selling calls. And one of the calls that they were selling were the 166050 that you have here, that was expiring on Friday. So what happened on Thursday? You see the big volume. They bought back all of those calls, and that put buying pressure on the equity market, on the stock market. So we had the market going much higher, and then we had the follow-up on the day after, because most of the time on Friday, due to the OPEX, the weekly OPEX and the monthly OPEX, as people are big in the money, the gamma is going much higher, and you had this big ramp from 48.20 to 48.70. Okay, so now market is hoo-ha-ha, we get champagne, and we have the all-time high. In other words, what happens is the leaders are still leading, and they are still the same. We are talking big tech, we are talking semiconductors, the fabulous 7. If you've been long those ones, you're making a killing. If you've been going long the other part, the rest of the market, you've been losing money or flattish at best. So interestingly as well, over the last couple of days, we started to have the end of the correlation between left-hand side, this is the S&P, right-hand side, this is the bond. So on Friday, what we saw is the yields of the 10 years, and from, let's say, Thursday to Friday, going from 4% roughly to 4.20%, and in the meantime, the market managed to move higher. So this is the first time really where we had a divergence over the last 3 to 5 months between bonds and stocks. So stocks have been doing very, very well despite yields going higher. So that's something that we should be monitoring, because that has been the big player of the last 6 months. If we see the end of this correlation, then we're going to have new market regime. So starting on Monday, what do we have? We do have like some leading index. We have the Bank of China policy meeting. Big number, flash PMIs on Wednesday. Why is it so important? Because as we have seen recently, especially with one number, so one number doesn't make a trend, but the US Empire State Manufacturing has been really coming lower, and there is a strong correlation between the US ISM manufacturing and the Fed index number. So we'll be interested in those flash PMIs. We'll be interested in all those Philadelphia Fed and Richmond Fed. Big number is obviously the GDP. So Thursday we have a very big day. with the Q4 GDP, the personal consumption. We got the ECB meeting, and we got the Japan CPI and PPI. So this is for the macro, a lot of macro. And on Friday, we get the PCE. So macro only. What about some bonds auction? So we got 61 billion, 5 years Wednesday, and then we got one on Thursday of 41 billion. As I said, the Fed, there is a blackout period, so you should not see that many headlines. You might see some headlines from the Wall Street Journal because, they are always get some news coming directly from the Fed. And we're still having the earnings call, okay, earnings coming, and then you should be listening or reading the transcript of some of the companies. You do have like Netflix, you do have like GE, IBM, some of the names. So, but really the biggest week will be the week after, where we're gonna have tons of big names. But still, you have some interesting names going into this week. So I'm interested into the price action that we have here of the stocks so far during this earnings season. So very early in the earnings season, mostly banks. We got the JP Morgan, Bank of America, Goldman Sachs. And you see here the price action, despite the beat in terms of earnings, price action has been pretty bad on the day. So even if companies were beating, they were not acting well, or the stocks were not acting well on the day. Question as always is, how many companies will be beating the expectations through the earnings and through the sales. If we look so far, again, it's only 10% of the sample, which is not big enough. But so far, companies have been pretty disappointing in terms of beating the sales and beating the earnings. Look at FactSet, they will give you all the numbers, but that tells you something interesting. Market is making new highs, pushing higher, and you can't be really say so far that has been because of good earnings, okay? So market is putting a lot of emphasis into what's going to be happening next. So a lot of expectations into those big tech, a lot of expectations into those semiconductors. As I said, we're going to have Microsoft and all those names in 10 days. So that would be really the space to be looking for. In terms of volatility, implied volatility, 1.10% for the week, so not much of a change. So this is it for me for this week. As always, join us on the Discord community. We are getting bigger. Try always to identify the drivers on the day, on the week. So that was TSM on Thursday. We had this move. We got the OPEX as well. So join. You're gonna have access to 2 to 3 free channels. If you decide to go for the mentoring or the 4x4 video series, you will have access to more channels for more advanced traders. And obviously, we will be very happy to have you as well. So this is it for me today. As always, if you got questions, you can send me an email or reach me on social media. All the best. Have a good trading week. Bye-bye.